Hey, what's happening? Sam with Nomad Trading. It's been a minute. Been a minute since we did the live stream. Had to jump on here. Markets have been on fire, right? I'm sure if you're watching this, then you probably have been bearing witness to the fire and tragedy that is the stock market really the last couple weeks, but especially today and yesterday, this week, really just every day for the last couple of weeks. We've had some bounces in there, but yeah, that's sold right back off. So what's going on? I'm sure most of you have probably already researched this and probably already came to the conclusion of the Treasury yield going up, bond prices going down, which basically means the market crashes. There's a bunch of fear in the market, worries about inflation, etc. So then the market sells off. And unfortunately, the market sells off more in areas of which I am holding stocks, such as Tesla. Things that are not so much based in reality and like the financials themselves, but based more on the future and the tech, the underlying tech, and the basis of what the stock's going to be worth down the road. Speculative type stocks and SPACs and EVs and things. Yeah, those are the ones that seem to get hit the hardest as people kind of try to put their money in safer, stocks, safer sectors, whatever. Anyway, so yeah, that's kind of where we're at. Unfortunately, I am holding stocks that are falling into that category, so this is not ideal. Let's got some people in the chat here. Yes, me too, Mr. Labanot. I think I have no idea how to say that name, but Dean, what's up? Manageable losses for you. Just trying to stay on the bear ETFs and cut all your long terms out. I feel ya. I've been selling a few of my positions that I'm like, not real convicted on. Just kind of getting rid of some of the ones that are kind of teetering on that edge of I'm not real convicted on them, and from a technical standpoint, they're teetering on the edge of where they could fall drastically. So I've cut some of those, which has led to some losses the last couple of weeks. And then I've held on to my longer term plays that I feel somewhat convicted about, but those have also been down a lot. So not ideal. I think I'm sitting down like $4,000 right now, just in the past week or two on my longer term plays. Somewhere around $4,000, maybe $5,000 at this point. So not a good feeling. Not a good feeling at all. Anyway, let's look at some of them. Might as well jump in and look at some of them. ARK, this is one I like them that people have called Cathie Woods the Warren Buffett of millennials, the modern day Warren Buffett. So, and I like her. I like a lot of the stuff that she invests in and the stuff that she talks about. I believe to be true a lot of the time. So. Kind of sad. This would be a good spot. This is a trend line that I drew. If you can see my daily chart down here, this is a trend line that I drew. It kind of, if you start here, the last time it kind of bounced off that line, and then as you can see today, came down exactly to that line, and that's where it bounced off, was that trend line. So perhaps that will hold up. That's kind of the best case scenario. What it's really going to depend on, honestly, most of these stocks, as we know, if you follow my channel, I talk about it all the time. 3 out of 4 stocks, maybe a little more than 75% of stocks follow the market. So if the market is selling off and the Treasury yield is going up and the inflation fears are there and yada, 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 most stocks are going to follow it. So unfortunately, like for instance, this one held that trend line. It bounced off of it today. That's great. However, if the market keeps crashing in into tomorrow and into next week, then this line will mean nothing, because I pretty much guarantee if the market keeps heading down and crashing, it's going to break this line and throw the technicals out the window. As we've seen the last couple of weeks, if you're a swing trader, you've probably seen countless setups that you had not play out because your setup was, whatever the case may be, a cup and handle or a daily bull flag or a bull pennant or whatever setup you were seeing, and then as the market tanked, it destroyed your setup. So that happened to me anyway. There's been several stocks that I've cut at a loss because of that. Stocks that I was watching the setup on, excited about the setup, and then because the overall market crashed, it would destroy my setup, and then I don't have a technical setup anymore. And then it becomes a question of, do I believe in this company enough to keep holding it, or do I just cut it because the technical setup's gone? So I've been cutting them, which unfortunately has led to probably around $2,000 in losses the last couple of weeks, maybe a little less than that, just in stocks that I've been cutting that I don't have that much conviction on, and the technical setup broke down. Thanks a lot, overall market. If you're watching this, by the way, don't forget to hit the like button, help the YouTube algorithm, get some more people on here, more people in the stream. Subscribe if you have not already. We're pushing 3,000 subscribers, which is pretty cool. There's also links in the description for like Acorns if you are interested in passively investing, if I can talk, that spare change. Like you go to McDonald's or somewhere and you spend $25.70. It takes that 30 cents that you would round up to the nearest dollar and puts that in an investment account. So you're making some money on that. It's just kind of a way of putting aside money that you don't really miss. You're not going to miss that 30 cents you spend at McDonald's. It rounds up. You'll never miss that money. So anyway, if you're interested in that, it kind of helps with like Christmas presents at the end of the year, or tires for your car, stuff like that. Or you can just use it as another retirement account and let it build up. And over time, it could be a realistic retirement account. Anyway, that's my little spiel on that. The link's in the description of this video and several other ones if you're interested in that. Go ahead and click on it. I've got a video I made about it too if anybody wants to know more about it. Okay, let's see what else we got here. Corinne wants to talk about AITX. Okay, I'll check that out. Stay positive. I think market misunderstood Powell a bit. I think we will see some green. I agree. I'm not, personally, I think there could be some near future pain. I'll look at that here in a second, so what I think anyway. But I think overall the market will continue up, at least for now. So not too stressed about it. I haven't sold my Tesla or anything, even though it's down 30-some% from its highs. So it's not ideal, but I do believe, like for instance, Tesla is one that I feel convicted on because I think they're way ahead of the game and have been for a long time when it comes to electric vehicles. But not only that, their solar roof program, where they're, like solar power could be the future. It's definitely getting more and more traction all the time, but people don't like the way it looks with the big solar panels in their yard or on the roof and all that. And their Tesla's solar company changes that, where they make roofs that are very tough and durable, and they're solar powered, and they look like a regular roof, or at least somewhat like a regular roof. They're more stylish. So that to me is a game changer. I think they're going to lead the way in fully autonomous vehicles when it comes to like Ubers and Lyft services and rideshare type stuff. At some point, I think they'll be the first one to really expand into that market to where they have fully autonomous vehicles that are giving people rides and doing ride shares and things, which would cut labor down for those companies. I just think that they have so much potential long term that it's one that I will hold. It would have to drop a lot before I would even consider, not that it's not already down a lot, but before I would consider bailing on them. Something major would have to change. Maybe if Elon Musk left Tesla and stepped down, that might be a bit worrisome for me, but as of now anyway. Let's see what else. Sucks losing money for sure. Let's see. Didn't trade anything today. I didn't trade anything today either, actually. Welcome back. What's up, Nafissa? Yeah, I didn't trade anything today myself, actually. I didn't see much going on. One of the only stocks I saw in my scanner was SLGG. We can look at that real quick. Yeah, SLGG was one of the only ones. It was up yesterday, and then today up even bigger. But it's one of those ones that's a little bit difficult to trade, probably because of the overall market. It just likes to give back a lot or all of its gains, which makes me nervous as far as like trading it to the long side. So I did not trade it today. I don't like, especially when the market's doing what it's doing today, it gets really risky to be trying to even scalp to the long side, because as soon as you buy it, the market will head down and then it'll take your stock with it. So it just, as you can see here, we got big moves to the upside, but then it gives it all back all the way down below VWAP. And then we have big moves to the upside, gives it all back down below VWAP. Big moves to the upside, gives it all back down below VWAP. So it just kind of over and over again has big moves, but then fades all the way back down and gives it all back. That's not what I want to see, because I like to buy bull flags and breakouts and things. So yeah, you could make money on it for sure, but it just becomes more risky and more difficult. Yesterday, I lost my behind on KMPH, and it was because, let me see here real quick. Yesterday, dang it, whoops, bear with me here. So yesterday we had a big down day with the overall market. Yesterday, and I think that's why this occurred, but I was trying to buy the breakout yesterday. Where was it? Was it up here? Sorry, I'm trying to remember where exactly. I didn't make a video yesterday, so I'm trying to remember where I took my trade at. But I was trying to buy the breakout. I think it was up here, right up here at the high of day breakout. I don't know. It was one of these high of day breakouts in this area here, and I went to buy it, and I did buy it. And then within a matter of minutes, it had dropped from 17 something, mid 17s to 15 something. So I was down almost $3 a share, because I basically bought the top thinking that I was going to buy the breakout. The news was good on it. Let's see what it was. I think they had FDA approval. Yeah, FDA approval. So the news was good. The news was solid. And I thought, hey, this is going to be a good breakout. It had already in pre-market gone to like 20 something and then faded back down and then was curling back up. So I thought, hey, I'm going to buy the pre-market high. And anyway, long story short, I bought it at basically the top for the breakout, and it was a fake out, which happens all the time. But this fake out slammed down even harder than expected, so it dropped almost $3 a share in a matter of a minute or two. So I ended up bailing out of it, which was the right decision, because it faded the rest of the day. All the way into today. Now it's all the way back down where it came from, which is ridiculous. But anyway, ended up losing like $700 on that one stock, on that one trade. So I do not like taking big losses that are near $1,000 or over $1,000 on one single trade. I usually trade smarter and more scared than that. But this particular one got me. So that one I did trade yesterday. Today I didn't have any trades. I was going to look at the overall. Let's jump over and look at that one that Corinne brought up. AITX. So this one looks very similar to many other charts that are going on, where they peaked out a couple weeks ago and then they've done nothing but fading back. pretty much a result of the overall market. I don't know much about this stock, obviously, but I haven't looked into it or anything. But from a technical standpoint, it's definitely not what you want to see. It's come down. It's given back over 50% of its gains from the initial move. Not ideal, and it's pretty much a victim of the overall market. If we look at I don't know, there's several different ones that there's a lot of stocks whose charts look pretty much like this, where they peaked out. I can't think of any on the top of my head, but where they peaked out, a couple weeks ago, and then have done nothing but go down since. It's mainly because of the overall market. What's it going to do now? I don't know. It's a lower price stock. Stocks that are under $1 are less prone to following the market, in my experience. So if the market bounces and heads up, I don't know if this one will do the same, because the cheaper stocks don't tend to, quite as often anyway, follow the overall market. Sometimes the market will bounce, but your stock will stay down on these cheaper stocks. But I don't know anything about it. There could be some kind of big news coming or something going on with it. I know nothing about the company. Just from a technical standpoint, though, you could be getting to a point where maybe it will. I'm sure that what you're wanting to know is where it's headed from here. So if we were to draw somewhat of an overall uptrend line from the very beginning of the move. I can't get my trend line to work for some reason. Really annoying. But anyway, yeah, you could be nearing that spot where maybe the overall uptrend line will hold, and if so, then maybe you'll see a bounce here shortly. You are getting to that area. After this, if that doesn't hold, it's probably going back down here under 6 cents would be my prediction. Good catalyst, Corinne says. Artificial intelligence, robotic assistance. Those are all good things. It's the right sector, especially the right sector for prior to a couple weeks ago. So you're kind of looking at a similar situation to Tesla and CCIV and many of these stocks that are more based on the future and based on speculative pricing, not really based on the technical setup right now or the actual value of the company or anything really set in stone. It's more based on what people think it's going to be worth someday and the future technology. So unfortunately, those are the ones that are getting hit the hardest right now. So you kind of fall into that category. Hopefully we'll see the market and everything start bouncing. But you were looking at UVXY, yeah. UVXY is a bit of a hedge against the market, because as the market goes up, UVXY goes down. It's kind of a volatility based stock, but it kind of, in theory, does the opposite of what the markets do. I have held it before as a hedge, but it doesn't really do exactly what the markets the opposite of what the markets do. Sometimes you'll see, it's, to me anyway, it's not a very solid inverse of what the markets do. And it's not really technically supposed to be a complete inverse of what the markets do, but I have bought it before as a hedge, and it didn't really hedge very well. Actually, there it is. I had it like a couple weeks ago. Would have been good to have it now more so than then, but it just kept dropping. As the market would go up, it would keep going, and there's no bottom under it. So that's why I cut it a while ago. I kind of liked it as a hedge at one point, but when it got to the point where there's no bottom anymore, it's making all new lows, there's no support, I ended up cutting it, because at that point we didn't know how high the market was going to go, and we still don't technically, I guess, long term. And this one had no base, no bottom, nothing to risk off of, which I didn't like, because it could keep going down into the 6s or the 5s. I mean, who knows? And I didn't like that. I didn't want to hold it forever. And whenever it would pop up, when the market would have a pullback and this would pop up, percentage-wise, it wouldn't quite pop up as much as it should have. So it wasn't quite the hedge I wanted it to be. However, as far as right now goes, the market's down. Or even now you can kind of see that, what I'm saying with that, where the market's had some pretty good down days, and this thing here still hasn't. It's still not above $10, which would be very frustrating. If I was holding that, I would be saying, you know, what the heck? Why hasn't it gone back over $10? And I remember when I did hold it, that's how I felt about it. The market would go down and this thing would just barely tick up. But the market would go up and this thing would drop more drastically. So it seemed like it was an inverse, but not a true inverse, where it would drop more than it would go up. Found it to be quite frustrating. But anyway, as far as you know, like hedging and stuff, the market is dropping. So if there was ever a time to own it, I guess now would be that time. Day trading. Dean says you've been day trading. Good cat. Just kind of reading through the comments here. Play the option day trade. Yeah, there you go. True. Everybody needs a hedge. I've actually shorted in my other account is better for shorting. My CMEG account's better for shorting. So on these days, like today, I didn't take any trades today, but had I taken trades, it would have most likely been more on the short side in my CMEG account because, like I said, you know, 3 out of 4 or a little better stocks follow the market. So when the market's having big down days, it's just a lot harder to find. Like here's a good example. I will pull up my Market Watch screener, which you guys have seen with the criteria I have. I have it as a tab up here, right there, where when I click on that, it automatically screens the market and brings up the top, and I've got my different criteria, which I won't get into. But anyway, some days this list will be 20, 30 stocks long. And as you can see today, it's only got 2 stocks on it. SLGG and AESE are the only ones showing up that meet the criteria of that screener that I have set up. So that's a good indication that the markets are not doing well. Yeah, CMEG, Joe said that he opted out of CMEG. I get comments every day on my CMEG video regarding the fees and the commissions and all of that. My broker review of them and my video about the fees. I get videos about it or questions and comments about it every day, talking about people that have decided to go to U.S. brokers instead. And I'm not necessarily with those videos trying to tell people that I'm against CMEG or that I don't recommend them. I just want people to be aware that, you know, you can trade a few times a day and the commissions are really going to add up. So as a new trader, or even as an experienced trader, if you don't have a solid setup that's going to make money pretty consistently, you're going to compound your losses by having all these fees and commissions and things on top of it. So it can really be a major drawback compared to like E-Trade. You may only be able to trade a few times a week under PDT, but the good thing is you're not paying commissions, so you can trade small and gain the experience without throwing a bunch of money away on commissions. So thoughts on CCIV? Oh, my old nemesis CCIV. I'm holding it, so yeah, I will definitely cover that for you, Mr. Mike. If you haven't already and you're watching this, make sure you hit the like button for the old YouTube algorithm. Let's get some more people in here and chat it up, talk about the markets. For those of you who have already, thank you so much. First of all, I wanted to touch base on SPY real quick. Let's see, so this is my, wait, where's it at? No. somewhere I have my, oh, there we go. So this is SPY, the S&P 500 ETF. So this is pretty much a good view of what the overall market is doing day to day. And this is a daily chart for those of you who are new. So, and I'm going to take VWAP off because we don't really need that on there. But, okay. So these are kind of some lines that I drew, and everyone has their own. First of all, are you guys seeing me all right? YouTube is giving me the message that it loves to give me. I don't know if you guys are seeing me and hearing me or not. I'm getting this annoying error message from YouTube that I get all the time saying that they are not able to maintain smooth streaming. So I don't know if you guys can see it or not. Let me get out of here. Get rid of StockTwits for one thing, because StockTwits, I had that up on one tab and that takes a lot. Okay. Everybody seems to be hearing me. First dip into trading. Okay. Okay, so these are some lines that I drew, some trend lines that I drew. Of course, with trend lines, there is no exact science. There's no guarantee a stock's going to react to that. And it's just me drawing things on a screen. So it's not like it's a official indicator thing that the computer comes up with. But I think it's, anyway, fairly interesting and seems to be, it's just what I see. It's kind of my vision of what the overall market's doing. So if we look at, let me see, let me move that up just a hair. Kind of, so these are some lines that I drew, some trend lines that I drew of the overall market. This is 5 years. Each candle represents 1 day, so this is 5 years of the overall market, the S&P 500 ETF. And it's interesting to see how the market kind of reacts and where we can go from there on predicting the future. So as we can see, it does react to this general level. I'm not saying my trend lines are exact or perfect, but you can see that, you know, the stock market kind of, it would hit that line and then kind of come back down and hit that line, walk along it. It did break out here and come down and hit this second line and then pop back up. So it kind of traded in that channel for a while, then it broke down below. We had a pretty good pullback at this point. This was the end of the year in 2019. You guys can probably remember that. We had a pretty significant sell-off at the end of the year that year. So then it recouped all that, got back up here. Then again, we traded between the bottom line and the middle line. Then we broke out, went back to the top line. Then this is the pandemic here. So all rules out the window at that point. So yeah, it tanked, threw everything out the window. As you know, you never know when there's going to be a worldly event or something like that that's going to just destroy your technical scenario. But anyway, quickly we've got back up above that. We went back up and again hit that same top line. Then we sold off all the way back to the bottom line. Now that would have been a great, you could have gone into a number of different stocks, and this would have been some great plays right here, because you could have shorted at that top trend line and then played the bounce, covered down here at the bottom one and played the bounce. That's a pretty nice move, the way it bounced perfectly between those two lines. Anyway, it comes back down and tests that bottom line, goes back up and tests the top line. So you can see that trend lines can be pretty effective, pretty important and pretty effective and respected. Now we broke out again, and as you can see, we're coming down. So this little move right here is what all the pain's about. Everybody's been feeling the pain the last couple of weeks, but it's really a small move in the big scheme of things. But we're sitting kind of right on top of that top line. It could bounce off of that and then keep going, but I wouldn't be surprised if we see it come down here to this middle line in the coming weeks. I wouldn't be shocked at all if we see it pull back down here to this middle. I hope not, because my stocks are going to get pretty painful if the overall market drops down, that much more. But I wouldn't be shocked. It wouldn't be, if you look at this overall chart of 5 years, it wouldn't be surprising at all to see it pull back to this middle line and then maybe consolidate and then head back up. Or worst case scenario, maybe come down and break the middle line and come all the way down to that bottom line before it ends up consolidating and bouncing up. We'll just have to wait and see. But if you're watching this, I'm sure you're like me and you're really hoping that it holds above that top trend line, maybe pops below it just for a second like it did today, and then ends up continuing up to make new all-time highs. That's what we want to see, but only time will tell. We're going to look at CCIV. Somebody mentioned that. Mike mentioned that, and I also hold that. So, yeah, this is one that's causing me a lot of pain. I bought it. I wasn't buying it up here. I actually bought it way down here for the bounce, because at the time I started buying it in the 30s, and now this is kind of similar to that chart we were just looking at, actually. If you look at that, so look at that compared to AITX, which was one that Corinne brought up. So very similar. See how we had the big move up, and then a few weeks ago we start moving down and we've got the huge move down. Look how similar that is to CCIV, which is a totally different stock, and it's got its own catalysts and its own reasons for this drop. But I'm just saying, remarkable how so many different stocks will have the same chart overall on the daily because of what the market's done. So again, we got this big move down. I started buying it here in the 30s because I thought it would bounce. To me, I thought this overall trend line might hold here, and I'm not drawing this very well at all, but you get the idea. I thought that the overall uptrend, and if we zoom out some, it might actually be a little bit easier to see, but anyway, so somewhere in there, I kind of thought that general uptrend might continue, but at that time I didn't know we were going to have a lot more downside in the overall market. So it is what it is. In retrospect or whatever, hindsight, I guess is the best way to put it. In hindsight, I wish I had just cut it when it kind of broke that general line and looked like it might be heading back down. I should have just cut it. But I didn't, because I actually like the company, and I know they're planning to come out with their first actual car this summer. So there's a lot of good things about Churchill Capital and the Lucid Motors scenario that I like. So I kept holding it, and I've kind of averaged down. So this might be one that I'm most likely going to hold long term, but you never know. It's making me a little bit more nervous now that we're getting down here in the 20s, the mid 20s. It's not where I envisioned it being. I thought that this consolidation here would hold, and that at the worst case scenario we might see $30 or a little below before it starts curling up and making its way back up into the mid 40s. So that's why I bought it, and now looking back, that was kind of a mistake. It did not bounce, because really the only bad news on that was the valuation of Lucid was different than what was expected. So to me, that's not grounds for the stock dropping more than 50%, but it is what it is. You can't control the market. The market's not exactly rational, so that's what happened. It went down, and now at this point we're down well over 30% or well over 50% from the highs. So now I'm a little bit less excited about it. I was excited about it up here, thinking, hey, I got this at a bargain. It's going to be a good longer term hold, and it's going to go back to the 40s at least. And now here we are in the 20s. So thank you, overall market, for heading down and destroying my plans. But I don't know. I haven't decided yet if I'll end up holding this. I've shorted it multiple times in my CMEG account. So on the way down, I've actually made money on this to the short side in my other account because it's easy to borrow. So that's the good side of it. I've been happy about that. I've probably made I don't know, 500, 700 bucks or something, maybe more, shorting it in the other account. So not all bad, I guess, overall, but would really like it to bounce. I'd really like to see it hit back up there in the 40s because it just would make sense, but apparently doesn't care what I think. Joshua Sacker, what's up? Been waiting to catch you. Hey, what's up? What's up? Okay, so let's look at something else. So as far as what this is going to do, by the way, I really don't know, and I think it depends on the overall market. The market is definitely what's driving more downside in this. I do think that there was a chance it would have bounced because there's a lot of people that believe in CCIV and believe in Lucid Motors as being a viable future competitor to Tesla. But now at this point, this is just one of the many mistakes I've made. People talk to me in the comments and emails and things like I'm some great trader, and I'm not. I'm not some great trader. I've only recently got to a point where I am profitable, and that was last year, and I've been doing it for over 4 years at that point. So I'm not some great trader, and I make mistakes just like this. I made a mistake yesterday by buying that KMPH when there was resistance on the daily chart. I should not have bought that. In hindsight, that was a mistake, and it cost me quite a bit of money. And this one here, if I was, now that I'm looking back on it, I wish I would have cut it at the break below this consolidation area because it was kind of curling up. But as it started to head down, that was my cue. I wasn't going to get the bounce that I thought that I would get or that I was looking for. So that swing wasn't really working out, and I should have cut it. And now I'm wondering if I'm going to hold it as a long-term investment or if I'm going to just cut it and take the loss. Hard to say, but from a technical standpoint, there's just not a lot of good things you can say about it at this point. It's kind of broken below. This was all consolidation here. You can see that it was consolidating in the same place on the backside of the move, but then we didn't get that bounce. We headed lower. The overall market's been heading lower. So now we're in a spot where it did double bottom. You could say that this is a double bottom here, around 2150 or so. So maybe that ends up being the double bottom. And as you can see on the zoomed out version of this 15-minute time frame, 20 days is the period. We could say that maybe we got a double bottom there. Maybe it bounces off that and heads back up in the 30s. We'll just have to wait and see. But at this point, there's just not a lot of good things you can say. You can say that, and you can say today it's ending green, which is a positive thing considering all the down days we've had. But it's just not a very good looking chart. It looks like the kind of chart that could maybe bounce and head down further, or could head down further right now. And then, like I said, I think it's going to depend on what the overall market does. If the overall market keeps dropping, it's probably going to drag this with it. If we get a nice bounce on the overall market, then maybe we might see this start bouncing. That would be ideal. That's kind of my thoughts on that. So, yeah. So I've struggled for several years to day trade profitably. My longer term, like 401k type money was profitable, but that's just stuff that was spread around and sitting for a long term or a long time and going up with the overall market. But as far as like day trading goes, yeah, I haven't had a profitable year until this last year. I'm doing my taxes now, so I'll actually see when I get all that done if it was overall profitable between my 3 accounts or not. But if not, then it was really close to break even and definitely a step in the right direction compared to other years where I've lost thousands of dollars. So definitely moving in the right direction at the very least. And I believe last year was my first actually profitable overall year between my accounts. So excited about that. This year, hopefully, will be the year that I make quite a bit of money. moving in the right direction, from losing lots of money every year, losing less money, to finally being profitable or really close to it. If not, then this year, in theory, I should have a year where I can make a fair amount of money. It's a slow process, or at least for me anyway, it's been a slow process. Hopefully you guys learn a lot faster and move a lot faster in that direction. Hopefully I can actually help you do that and kind of lessen the curve. So this is the SPY. Wow, it's kind of shocking to look at from that view. This is 15 minutes and 20 days. It's pretty shocking to look at from that view, because you got these days here were considered normal days or big days, and then as time goes on, look at these huge swings we have. We just have huge swings up and down in the market. Crazy. Or like today, this is the 1 minute chart. At one point we were at 384 and got all the way down to under 372. So $12 loss just in one midday, basically, on SPY, which is quite a bit. Down another 1.5% basically today. As of right now, at one point we were down more than that. What did the markets do? Let's see. The Dow is down over 1% today. NASDAQ down over 2%. And S&P down 1.34% today. So another not so good day. Really need those treasury yields to come down. Give us some kind of relief. The problem with that also, for those of you who are interested, thanks for hitting the like button, by the way. I see we're getting up there to 7 likes. That's awesome. For those of you who don't know what's going on with the overall market, the treasury yield has been rising. Price of bonds has been going down. The way that they can fix that is by basically printing money and buying a ton of bonds. But the problem with that, with the government doing that, the treasury doing that, is that you're printing more money and buying more bonds. It might help the market. It might not. There's no guarantee that it would save the market. It probably would. But the problem with that is that right now we've got major inflation concerns. There's a lot of fear in the markets over whether or not we're going to have a lot of super high inflation, considering the stimulus packages and all the money printing we've already been doing. So on one hand, you could print money and try to buy bonds and try to bail out the markets. But on the other hand, people are smart and they realize there's already a ton of fear in the markets regarding the possibility of hyperinflation. So if you start buying more bonds and trying to bail out the markets even more, people know that is that really a good solution, or is that just going to add to our issues with inflation? So there's not really a good fix at this point. Normally that's what they would do, but at this point, they know, the government, whatever, knows that, they're kind of putting a Band-Aid on it, hoping that you can prop up the markets, but that may not work, and then you've only added to the hyperinflation worries, the fear. So I don't know what the answer is, what they're going to do. Last I looked, the 10-year treasury yield was still climbing, and we're at one point today we're at like 155 or so. And that really big day last week, the highest it got to, I think, was like 160, and that was the largest increase in treasury yield in a single day in like a decade. So that's where all of this started. And then to get today again, we're seeing similar numbers. So of course people are very worried about that. My baby, Tesla, not ideal. Oh look, it's even selling off even more. Last I looked, it was back up in the 620 area. Now we're back down to 614. Does that mean that SPY is selling off more? Yeah, kind of fading off. The overall market's kind of fading off. The overall markets, by the way, SPY, I know I talked about this a lot in this video already, but it's a good idea to have SPY in one of your windows. I always keep SPY or one of the overall market indicators in one of my windows, so that way if my stock starts dropping, I can click over here and look, and a lot of the times it's because the overall market is dropping. If you're scratching your head and thinking like, why is this dropping? From the technical standpoint, it should be going up, but it's dropping. And you click over there and look, and a lot of the times it's because the markets are dropping for some bigger overall reason, and it's taking your stock with it. So anyway, this is my baby Tesla. So we were way up here in the 900 area just a couple of weeks ago. And it's the same thing where it's just kind of fallen off a cliff. Same as that stock I was just talking about that Corinne brought up. And same as CCIV, we kind of see a similar situation here where it was up at its peaks a couple of weeks ago and then has been nothing but down ever since. So would really like to see it bounce off of this area here, but we'll see. Let's see, what was it going to do? Remove all. This is a pretty commonly talked about stock, so this is another one where let's try to draw somewhat of a trend line situation here. So we got to kind of eliminate that, or we can back off and include it. When you draw your trend lines, sometimes you got to either kind of ignore one or two spots where the chart drops way down or goes way up, or sometimes it's not going to be a perfect trend line or a perfect chart. It just depends. But for this, if we kind of follow these lows here, Tesla could end up dropping a little bit more before it hits that trend line. So at this point, most of the pain is kind of over, I hope. Only time will tell, but we'll see. I mean, this is a huge down day today. Down another 6% today, and that's as of right now, and we were down considerably more than that because it dropped well below 600. So in theory, this general trend line will hold. That's what I would like to see. I'd like to see it come down. I'd really rather see it not come down anymore, but if it's going to come down, hopefully it will hold around this trend line. So tomorrow that would put it somewhere around the 570 area or so. Hopefully it can hold above that. Maybe even just bounce right off the bat here. That'd be great too. But if it's going to come down, hopefully it'll hold that line, curl off of it, and then head back up and be seeing upper 70s by this time next week. Or 700s, sorry, not 70s. 700s by this time next week. I hope. We'll see. It's got some consolidation. It's got lots of hurdles to overcome in the 700 range, but it could happen. From a technical standpoint, not looking very good. But from a technical standpoint, it also wasn't looking very good down here. It also wasn't looking very good in this area. Then it bounced off the trend line. Wasn't looking that good several different times. Or here, for instance, if you were back here in this area, you would have seen that it came up and topped out, came up, topped out, came up, and basically triple topped, even quadruple topped if you count that there. So there was a lot of times there that I would have been like, oh man, it can't break through that level in the mid fours. It's gonna head back down, come back down here and retest the 275 area before it heads up. But it didn't. It ended up keeping on going, and in fact it actually sped up and went virtually parabolic at one point. So hopefully this is a similar situation where it doesn't look the best from a technical standpoint, but ends up holding up its gains or bouncing off this trend line area and then heading up. We'll have to wait and see. Anybody got anything else in here? We've got 11 people in here, 9 likes. You guys are awesome. Thanks for the likes. So we've got some people in here. We've had some people in here. That's cool. I haven't been doing these as much for a while there. The interest in the stock market overall, I think, kind of faded back a bit. But now everybody's watching the markets plummet and getting a little bit nervous. We're getting some people more interested and intrigued by what's going on with the markets. So that's exciting. Let's see. This kind of worries me, by the way. The S&P, as we can see right here, we did pull back. When was this? In February? Well, let me see. Yeah, I think that's when it was. The bottom of it was January 29th, it looks like. So yeah, the end of January, basically, we did have this pullback. People were pretty nervous, but it kind of held this 50 moving average. It kind of bounced off of that and headed up to new all-time highs, which I thought was crazy at the time. If you watch a lot of my videos, you'll see me talking about how I feel like the overall market is almost a bubble, that it doesn't make much logical sense to me that the market would be, we would come through a pandemic, and then at that point, businesses were not even opened up yet, and the economy to me was not roaring back like people talked. So it felt like we were in a giant bubble. It didn't feel like we should be hitting all-time highs when things have not gotten that much better. If we zoom out a little bit, this was kind of the big pandemic, and we came out of that and then kept pushing to make all-time highs. So logically, it seemed to me like we would be needing a pretty significant pullback again. But it just kept going, and then when it would pull back, it would go back up, pulled back again. Now at this point, I would have said, man, this thing's definitely heading down, because we already are overbought, in my opinion, and really pumped up in a bubble, and it hit that level. Then it got rejected again and started heading down. So I thought for sure this was going to be the big correction, but it didn't. It bounced and kept going. So I'm hoping that we've got a similar situation here. We do have a little higher volume down here, bigger red candles, which I don't like to see. We don't really want to see bigger volume come in on the down days. That can be a bad sign as far as when we're looking for bullish scenarios. But and then it, like I said, it broke below that 50 moving average. So not just touched it and kind of went up, it broke below it significantly today. So it could be more downside coming. I hope not. I hope that we're seeing it, it's kind of pulled back and we've got a little bit of a candle wick. I'm hoping that means that we're going to end up jumping right back up. Hopefully they pass a stimulus bill, which I'm sure if you're like me, you probably have mixed feelings on that. There's definitely people that need direct payments, but then on the other hand, there's a whole lot of other quote unquote fat and stuff stuffed into that bill that I don't really like. And like I said, we've got major inflation issues and the possibility of hyperinflation, depending on what your view is on that. I don't know. I just don't know that I love that it's $1.9 trillion. I think I would rather them just pass a more direct bill, giving the people what they need, helping just the people out, and then maybe try to figure out a better solution to all the local and state government bailouts and all the other money that's in there, the fat that's in there. But that's just me. Regardless, I'd like to see them pass something so it can prop the market back up. We can get back to all-time highs. I'm hoping that'll have some effect, assuming that they will pass the stimulus sometime this month. We'll see what happens. I hope that will be enough to bounce everything back and we start pushing all-time highs. That would be great. Get the fear out of the market, but only time will tell. XL Fleet and OPTI are a couple. Okay. XL Fleet, is that XLF? Is that the ticker? XLF, I think. Is that what it is? No. I've heard of that, I'm pretty sure, but I'm not sure what the ticker is. XL. Oh, there we go. XL. It's just XL. I got it. There it is. And then we'll look at Opti. Okay. XL Fleet. So, yeah, on the daily chart, at least most of the pain should be over. I mean, it's already given back everything. This is what worries me about my CCIV, is looking at charts like this where, you know, they're pretty parabolic, like it kind of was at one point, and then it gives it all back, and then it just keeps going all the way down to where it's basically where it started from. But yeah, so the pain should mostly be over because we're getting down here. I would say at this point it should start holding up. Let's zoom out a little bit. So the bottoms here were in the 10s. Typically what you'll see in this scenario is a stock that goes to the moon, so to speak. And if it pulls all the way back down like that, a lot of the times you'll see the ultimate bottom be slightly higher than if it goes all the way back down. The ultimate bottom typically will be slightly higher than the previous bottom. So since the previous bottom was in the 10 range, I would think that we should start seeing this holding up. Again, it depends on the overall, the overall market, because clearly that's part of what's going on with this stock. The overall market is dragging it down, but I would think that the pain would be mostly over. You're kind of in this little consolidation range here, around 12. It's kind of where you're sitting now, and still up above where the original bottom would have been, the consolidation bottom down here in the 10s. So I would guess that you should be seeing the end of your pain soon. It should start curling off of this area here. There's no guarantee. If the market starts continuing to drop, it'll probably drag this down more, but hopefully you should see it consolidating here in this 12 range and then maybe starting to curl. I don't know anything about the company, so I can't really say that I really know anything fundamentally about what's going on with it. But from a technical situation, there's not a lot of good you can say from a technical standpoint at this point, other than, sorry, using point a lot there, aren't I? Not a lot of good things you can say about it from a technical standpoint, other than the pain should be mostly over and you're getting to this consolidation here. So if you're holding it and have been for a little while, in theory, it should start finding its bottom here. Maybe this will be the ultimate bottom. It may test it again. We'll see. And like I said, it really depends on what the overall market does. But yeah, I would think that it would be starting to consolidate in this area and then maybe move up from there in the future. Opti, OPTI. What have we got here for Opti? You guys are awesome. We got 11 likes now. Pretty cool. Thank you so much. And we're pushing, like 75 playbacks, it says here, or something like that. Cool. Cool. Kind of a popular video. Been here almost an hour I've been doing this. I swear the time flies by when I'm live on here. It just amazes me. So, OPTI, we got another lower price stock. As you can see, similar chart to the other one you asked about, Corinne. It's just kind of the way that a lot of charts are looking right now. A lot of these same technical situations where they were hitting their highs a couple weeks ago and really kind of going parabolic. A lot of stocks were making this big move a couple weeks ago, and then so many of them have given all that back. And then now you've formed somewhat of a head and shoulders pattern is what we would call this. So you got kind of a shoulder here and then the head, and then you've kind of formed another shoulder here. And then typically what happens after the head and shoulders is you see more downside. So from a technical standpoint, not a lot to like on this one either. I'm kind of a broken record, I know, because all these stocks are in similar situations where they're just going with the market. The market's been tanking, so all these stocks have been breaking down. Had this held up in this area here, you could have seen a possible move higher, and the shoulder might have held up higher, and then it might have continued up. But now that we've broken down, we've got somewhat of a confirmation of a head and shoulders. So we're heading down. Now you'll be looking at the 12.5 cent range and hoping that that holds, which would be kind of the tops, the consolidation and tops of this area here. If you're lucky, that will hold if it continues down. I mean, if you're really lucky, then they'll put out some news and get this puppy cranking back up, which could happen. But if they don't put any news out, nothing changes, and the market keeps going the way it's going, then I would look for it to hopefully consolidate around the 12 to 12.5 cent range right here, and then see what happens from there. Hopefully you get a bounce off of that, and it will continue to go back up. If not, you may see some consolidation here, and then depending on the market and all of that, etc., it may consolidate, then it may continue down more. Then you'd be looking at this 7.5 cent range right in here, hoping that that holds and consolidates there. But we'll see. Let's see what the future holds. Right now, I can't give you a lot of hope. I can't be like old StockTwits and tell you that it's going to the moon, because right now it just doesn't look very good from a technical standpoint, unfortunately, like so many other stocks, including the ones that I'm holding. So we're all in similar situations, I think, many of us. Thanks for stopping by, Nafisa. Have a good one. WTRH moving after hours, 95 million flow. Nothing too exciting. WTRH. Okay, let's check that out. Okay, I like that. Pretty choppy on its way up, but it has made a nice big move, which is good. So we're up $1. My nose itches. Sorry. Up $1 from where it closed at. That's cool. And at one point up more than that. Kind of getting to this consolidation area right here. So not a big shocker there. We kind of get to the area where all of this consolidation happens. So maybe we need to break out past that. If we look at the daily chart down here, this is the daily chart. So again, we're right in this same area of consolidation where so many times it kind of topped out at, where are we at right here? $4, just a little over 4, so 4.05. So many times this stock found a high around 4 and $4. Same thing back here, just over $4 was the high. So, and then same thing here, other than this day right here where it did break out. But then gave most of it back. But many days it's kind of topped out around that $4. So right now it's kind of struggling with that same area. Let's zoom out a bit more, see what we got longer term. So then the next area would maybe be 460 or so. 442. So yeah, it's not the ideal chart. I was hoping that we wouldn't see much above that $4 range, and that maybe this thing would break out past 4 and then have a clear shot to go up a lot more. But unfortunately, we got several tops in the $4 range, which it could break through. It already has once after hours, so it could break through. But then we don't have clear blue sky up above. We do have this whole area here. So zoom out a bit more. So I like it a lot more over, what is that, 487 or so. So when we start approaching that $6 range, I like it a lot more. At that point, it really could run all the way up to almost $10 maybe before the next real resistance. So got some potential there. I'm assuming it has news. Let's see. It says it will expand into the cannabis market. So basically they just announced they would expand into the cannabis market. Is that what I'm gathering here? That's what it looks like. Okay. Well, good for you. Hopefully Yeah, if we look at the zoomed out version on the daily, we got several days where it just finds tops in that same range. So hopefully it breaks out past that, and then we might see some squeezing going on and the possibility of a big move. I'd love to see this thing start squeezing up and then rip past $6 and go all the way to 10. That would be awesome, and it could happen. Right now it's looking a little bit more weak. It had a big move up, but it curled over, and then now we're seeing it kind of look more like it's going to fade. It doesn't look like a pullback and strength to head up. It looks more like it could be backside of the move. So we'll have to kind of watch it and see what happens. And it could be because of all that resistance, like I said, in the 4 range. But hopefully we see it continue up. If not, it may pull back down to the 350, 360 range, and then maybe curl off of that. Let's see. We'll see you tomorrow. Cool Joe P. Have a good one, buddy. I guess I will get off of here as well. We have made it an hour. That's a long live stream. It goes by super fast, but it feels like, I'm sure you guys get bored with it. Run out of things to talk about. So we'll see. I'm going to check on my baby one more time. Tesla, what are you doing? Going to 615. Come on now. This is ridiculous. We need to definitely see. If you zoom out, though, this is what gives me hope on the old Tesla baby. This is 15 minutes, 20 days is the time frame. So each candle is 15 minutes, and we're looking at 20 days. So each one of these little boxes represents a day. So it gives me hope, and if you're holding Tesla or you're a Tesla fan like me, that move right there, it could very easily recover that. The good thing about Tesla is that it can recover super fast also. Like right here, we saw this move from, it was kind of heading down, but that morning it had moved from 740 or so. It was at around 740 to, let's see, what was the low? 619 or so. So it went from all the way up here at 740 down to basically 620. So an $80 drop, but it gained all of that back pretty dang quick. It took like a day and a half, maybe 2 days, and it gained all that back. So that's a good thing about Tesla is that and there's several stocks like this, not just Tesla, where if they got a good following and they got a lot of belief and people know that they are going to be a huge piece of the future. So maybe they're overvalued and maybe they pull back big and maybe that it's an exaggerated move compared to the market. But the good side of that is because of all the people that believe in them and everybody that knows that they are going to be a big piece of the future one way or another. So that means that they can bounce big. I wouldn't be shocked at all for this to be in the sixes like it is now, down to 600 or so. And then within a few days, if we got stimulus news or got something with the market moving in the right direction or some positive Tesla news, I wouldn't be shocked at all to turn around and see this pushing back to 750 or even up here in the 780s within a matter of a couple of days. So the bounce potential is definitely there as well. It can make big moves to the upside. My next live, I don't know when I'm going to do my next live. Corinne, I hope I'm saying that right. Ask when my next live is. For a while there, I dedicated myself to doing a live video, daily runner recap, every single day, a little bit after market close. But it just didn't make sense from a time standpoint where so many times I'd be at a friend's house or I'd be out shopping or doing something with my kids or whatever, and I would stop and rush home because I had dedicated myself to, I wanted the channel to have consistency and to be there at a certain time every day and do a live video every day. But the problem with that is that it turns into a major headache, and it was kind of worth it as an experiment. It was fun, and I got to talk to a lot of my subscribers and people, which is really cool. But the downside was I would rush home and quit what I was doing to make sure I was here on time, and then we would end up only having 10 or 15 people watch the live stream, or just a couple. There was a couple of days where there was just a few people in there. So then it kind of you weigh the pros and cons. Is it really worth revolving my afternoon around being here at a certain time for just a couple of views and a couple people there? And I think we would all agree that it's a difficult thing to do that, to justify that. So yeah, I tried it for a while, but at this point I'm kind of doing it more when I feel like it. Like today, I just felt like talking to some of you guys and seeing some of my subscribers and seeing how you guys were doing and checking in with you, because I'm sure that y'all are feeling the pain like I have been with the last couple of weeks and all the down days. So I thought I would check in and make sure y'all are doing all right and kind of, you're faring all right with the crazy down days, because I'm sure you, like I said, you're feeling the pain the way that I am. I'm sure, if nothing else, your 401ks and retirement money is feeling it. That's where I'm feeling it anyway. So I don't know. It kind of depends on if people want to see it. If you guys want to see it, there's going to be people around to do some live streams. Maybe I'll do it a little more often. Anyway, I try to keep it real. I appreciate every single one of my subscribers. You guys are so awesome. But I do also keep it real that it becomes somewhat of a job when you got to revolve your whole day around that. And it's a little bit disheartening if you do revolve your day around a live video and then there's hardly anybody in there or doesn't get very many views. It kind of, sometimes, like I said, sometimes I'm doing something fun with my kids and I'll be at the park with them or something, and then it's like, Daddy's got to go home. We got to make the live video. So then I look back on that and I'm like, was that really worth, quitting doing that fun time for just a few people? So it's all about the pros and cons, And I may do some more as my subscriber base grows, and if people want to see more live videos, then I will do more live videos. I definitely can. I think it was more just the commitment to doing it every day that became difficult. So anyway. Anyway, I guess I will get off of here. You guys are awesome. We're up to 12 likes. That's pretty good. That's a pretty good like ratio to views, so thank you guys for that. And yeah, I don't have much else to talk about. Really, there's not that much exciting as far as what I love, which is scalping and momentum plays, all the momentum plays. Oh, GameStop. I was going to look at that too. That one was kind of running the other day. I've made a lot of mistakes too. I could cover that. I could cover my mistakes. The last couple of weeks I've made a lot of really stupid mistakes that have cost me quite a bit of money. So just know you guys are not alone when you make a mistake. What was that? That was a 1 minute candle that just shot up with a high of 140.91. So almost 141, and then right back to 128. What? I have a feeling that was probably more of a misprint scenario. I really doubt that actually happened. Sometimes you'll see misprints on your platform. I don't know if it's a misprint or something going on behind the scenes where a market maker puts through an old order or what exactly it is, but a lot of times you'll see things like that and scratch your head like there's no way. A stock will be trading at $200 and then all of a sudden there'll be a print down at $100 and you're like, what? Yeah, that's not the case. Don't be sitting there thinking that you can buy it at $100 or that you could have sold that at 141 just now. It's some kind of mistake. I just can't speak as to exactly who it is or how it's happening. Or it could be an old order that the market makers just decided to throw in there from, a couple days ago or something. It depends on the situation. I don't really know exactly what it is, but it's not legit. That's all I know. But anyway, GameStop was one that I was kind of just starting to speak about my mistakes. You guys are not alone in making mistakes. One mistake I made the other day, 14 likes. Awesome. You guys are awesome. Yeah, have a good one, Dean. For sure appreciate the live, Joe says. Awesome. Thanks, Joe. Okay, so one mistake for those of you that are still in here, if anybody wants to hear about my mistakes recently. Looks like we only got 5 of you left, but that's okay. Just I feel like airing some of my mistakes. So if you're still in here, some mistakes I've made in the last couple of weeks, and I just really want to just like doing this because I think it's important to know that some of the best traders I know, including like Ross Cameron with Warrior, make big mistakes too, like hit the wrong button, for instance, and things like that. What happened to me on GameStop was, let's see what day this was. This was, I think it was this day. Was it this day? No, this day. It was right here. So what happened this day, because I'm pretty sure that's where it opened and tanked, right? Anyway, that doesn't really matter. The point is, you could say it was this day or whatever, but it was back here in this area. What I did was, for those of you still watching who want to know about mistakes I make, I placed an order pre-market. I went to buy a stock. It was GameStop actually. So I went to buy 50 shares of it. And I want to say it was like $150 or something like that at the time. Maybe somewhere around there. I don't know. I can't remember. Maybe it was in the 120s. But anyway, pre-market it was moving. It was moving the day before, and it was moving pre-market. So I bought it pre-market to trade it. And what I did was I placed a trade, but I didn't have it on extended hours. So I just placed a trade, and obviously it didn't fill because it was during pre-market, and I didn't have the destination as extended hours, so it didn't fill. So I placed an order, and it was just out there in the universe, and I didn't remember to cancel that order. So, and I might have even done it the night before. I can't remember if I placed the trade the night before or that morning or when exactly I did it. All I know is that I wasn't aware that I had an open order, and the stock opened, GameStop opened that morning, and it ended up dropping. It might have shot up briefly, I'm not really sure, but it ended up dropping. So then I'm looking at my overall portfolio, kind of looking and seeing where my other stocks are, my longer term stocks are in that bigger account, and I noticed that I'm down $1,000 on GameStop, and I'm like, wait a second, I don't have any GameStop. I traded it, I scalped it pre-market, but I was up $100 or so on it, and I got out of it. I don't have any GameStop. And then I look through and I figure out that sure enough, I had an open order that I forgot to cancel that filled at market open, and then the stock had tanked, and it had actually gone into a halt. So it was like literally worst case scenario where I had a stock I didn't even intend to buy. It happened to be a very volatile stock. It happened to go down big at open. And then on top of that, when I realized I was holding it, it was going into a halt on the way down. So if you watch the stock market a lot, you know that you don't want to be stuck in a halt on the way down. It's a very bad situation to be in because a lot of times they will unhalt much lower and then just tank from there. So you're really messing with fire, holding a stock into a halt on the way down. So anyway, so that's what happened to me. So it unhalted, and then luckily it bounced. So on the bounce, I got a pretty good bounce, like $20 a share bounce or something, and I was able to get out of it. But it was still a almost $600 loss, just on my own stupidity of not making sure that my orders were canceled and not realizing I had an open order that was going to fill. So just thought I'd put that out there, that you guys know that I make mistakes like every trader. Traders that are far better than me, because I'm not even that good of a trader. I know more than a lot of beginners, like knowledge-wise, but actually trading, I'm not an amazing trader. I'm not a Ross Cameron by any means. And even Ross Cameron makes mistakes. I've seen him fat finger things before, like just, was it yesterday, I think it was? I was watching his live stream where he was buying and selling an account, and he was in a different account than what he thought. He thought he was in his such and such account, and he was actually in his retirement account. So anyway, or vice versa, I can't remember, but it just shows you that even the pros that make a ton of money like him can be accidentally trading the wrong account or fat finger a button. I've done that multiple times. I did it just last week or 2 weeks ago. There was a time that I bought a stock, and I immediately sold it by accident. Like I was clicking the buy button, and somehow, I don't even know how, but I sold it right away. And the stock, I bought it in a dip, but it dipped a little bit more, but I was okay with that. But I sold it right away. So the worst timing possible. I accidentally sold it when it was dipping before it went up, and it did go up, and my plan was sound. Everything about my plan worked out. It was just that I looked down and realized that, hey, I have already sold that. Somehow I apparently sold that right away at a loss. So we all fat finger things and make mistakes, and there's been several times. There was one with HYLN. I don't know if you're familiar with that stock, HYLN, but I had quite a bit of that I had held for a couple of weeks as like a swing, and I decided I was going to set a stop on it because it kept fading. So I went to set a stop, and somehow, not somehow, I didn't use a stop when I went to sell it. I didn't set it as a stop loss. I just set it as a limit, and I sold half my shares at a big loss. And what was funny was that immediately after that, I'm talking not even 10 minutes after that, on a stock I've been holding for a couple of weeks waiting for this big move, and like 10 minutes after I accidentally sold half my shares, it rockets up. I mean, just went crazy. I ended up making a couple $1,000s on it because I ended up buying back in way higher with the other half of my shares and keeping my original half the shares. But anyway, I ended up making a couple grand on it. But there was another ridiculous mistake where I just didn't use the right order type, and I accidentally sold half my shares instead of putting a stop on them. And then it happened to be the worst timing ever, where the stock rockets up right after that, before, because at the time I thought, that was stupid, and I just took a big loss that I didn't plan to take because I think it's going to come back up, but it may go back down, so I'm just going to leave half the shares off. And then boom, it rockets up just huge. And I couldn't help but look back and be like, man, if I had just not screwed that up, I would have had double the shares at my original price way down there, and it would have been, basically another $1,000 on the win just by not fingering the sell. So we all make these stupid mistakes like that. I just think it's important to remind you guys that if you're new to trading, that it happens to everyone. People that have been trading for several years, people that are amazing traders, people that are just like me that are average. It happens to everybody. Everybody makes stupid mistakes here and there. So you can feel better about it whenever you do the same thing, because it's going to happen. And there's going to be times where you accidentally hit the wrong button. It just happens. Anyway, other than that, I really don't have anything else to blabber about, and I think I've droned on long enough at this point. It's been close to an hour and a half. So Thank you all for watching. Those of you who are still watching, thank you so much. And those of you who were watching that headed out, I appreciate it. To those of you watching at this point in the future that are not watching it live, thank you guys for watching. Make sure you subscribe if you have not already. Let me know in the comments what you like or don't like, or things that you think that I could do differently, or that you. One thing I get a lot is that people tell me all the time that I need to be more peppy. I need to be more of a YouTuber, more of a, hey, what's up, guys? It's Tim here. Great of you to stop by. You know, I just have a really hard time putting all that inflection in my voice. My voice is naturally lower. So if you're thinking about commenting about my voice needing to be more excited, you're probably wasting your breath. I wish that I could do that easily, but my voice is naturally very low. So I guess I was meant to be more of a radio DJ, late night radio DJ that could put you to sleep at night, more than a crazy hype YouTube guy. But forgive me. Anyway, thanks for watching. I appreciate it. Like I said, subscribe, hit the like button if you haven't already, and let me know things that you want to see videos about in the future, different platform ideas that you want to see videos about, or do you want to see more technical analysis? Do you want to see more, whatever, scanner videos? If you haven't seen my scanner video, check that out, because that's a major thing. That scanner is free, which is crazy. I wish I'd had that over the years. Really helpful tool to have. Yeah, anything else that you want to see or want me to talk about, just let me know in the comments or email me. But anyway, I got me a question from RJ. Are you paying to get the level 2? I don't pay. Yes and no. I don't 100% know exactly what it charges, but E-Trade has, I believe they call it real-time quotes or something like that. And it's a subscription to real data, like real-time data or real-time data quotes or something like that. But that's what it is. It's a subscription to getting your data feed in real time, which is what level 2 is. So you do have to subscribe to that, but I don't ever pay anything for E-Trade Pro, and I haven't in all the time that I've had it, because if you place more than, I believe, don't quote me on this, you might have to do your own research because it might have changed, but last I knew, I think it was 12 trades a quarter, or I think it was 12 trades a quarter. So basically, you would have 12 trades per 3 months. So like 4 a month or whatever. I can't remember what the numbers are, but the bottom line is, even in my accounts that have been under PDT, where you're restricted to only trading so much, I've still never paid for it. So 30 trades a quarter. Okay, there you go. See, you know stuff. You'll be you won't pay for it. I don't know why I'm struggling to talk now. I swear I haven't even been drinking yet. But yeah, you don't have to pay for it. You might have to pay for it, but you don't have to pay for it. As long as you trade, even the minimum under PDT would still get rid of that. You don't have to pay. So there you go. You got it. So it's like $100 a month, and the real-time quotes and blah blah blah. But I don't pay attention to it because I've never paid it. So I'm sure that you won't either. If you're trying to learn how to trade and you trade relatively often, then you will have no trouble with it. 30 trades a quarter is what RJ says, and that sounds accurate. That sounds very accurate. So yeah, you won't have to pay for it. As long as you trade even the minimum under PDT, you won't have to pay for it. I've never paid a dime for it. And I've had it for E-Trade for 5 years, and I'm pretty sure that I've never had a month that I paid for it. So very easy to qualify for that and get it for free, as opposed to CMEG, which is $125 for the platform, and whatever they have the same thing. They have a rebate thing where if you trade a certain number of times, they waive the platform fee. But I've never qualified for that, and I trade that, just as much as my E-Trade or pretty close to it, and I've never qualified for that, which is funny considering that E-Trade has zero commissions and I pay almost nothing in ECN fees or commissions or any of that, whereas CMEG, I've paid thousands in there, probably already this year, and yet they make it really difficult to get the rebate on the platform. So it's just one more reason why CMEG needs to step their game up. I know they're the only game in town, so they can get away with whatever pricing they want, but it does annoy me to great lengths that they could be a lot more competitive, because they're basically for new traders. The point of CMEG is mainly for new traders to get around the PDT. So they could help some people out and actually be reasonably priced, maybe like $1 a trade commission and like very low ECN fees, and they could be way more affordable. Maybe their platform fee is $125, but they do the same thing as E-Trade, where 30 trades in a quarter, they waive it. They just, every chance they get you. They have to make a ton of money. I've never looked in. I don't even know if they're traded publicly or not. I don't know anything about the company, but they have to be making a ton of money because they're the only go-to for getting around the PDT. As far as a direct access, decent broker, they're the only ones. They are very naughty. My trades today. I didn't trade today, RJ. So, no trades today. Other than selling, I did sell some positions that were swing positions that I had like a technical setup on, and then because of the market tanking and being a pile of trash, the market has tanked and destroyed my technical setup. So those swings I cut for like $100 and some, $150 or $200 loss, but they weren't really trades. They were just me realizing that the market has destroyed my technical setups, so I might as well bail on it before I end up becoming a bag holder. So no trades. What's up, X? Anyway, I'm sure you guys have had enough of me yammering on at this point. We got 15 likes. That's awesome. That's pretty good. I'm happy to get 15 likes on a live video. So pretty cool. Thank you guys for that. I don't really have a whole lot else to yammer about. I'm kind of watching GameStop tick up a little bit here. Kind of curled a little bit. Now it's ticking up. It's about to test the 200 and VWAP, and the bottom of this consolidation here is all in this 130 range. So be interesting to see. I'd like to see it get up there. I love when GameStop runs. I've honestly overall not made money on GameStop, which is really frustrating, and it seems insane as a day trader to see a stock go from whatever it was at to almost 600, then back down, then go to 200 again. And I've been there watching it all, and I've taken trades on it, but overall I've actually lost money on it. It's one of those stocks that is very difficult. I was trying to explain this, by the way, to some friends of mine the other day, that it's really difficult for traders who have been doing this for years to trade GameStop and several other stocks that are like GameStop, these meme stocks that are just crazy volume and go up like crazy, because they do a ton of fake outs. There's I don't know how many times I've seen a technical setup on GameStop, and if you buy it at that technical setup, which I've done multiple times, then it immediately gets rejected or fakes you out. So there's tons of times that a breakout turns into a fake out. Spots where normal traders would be jumping on it, and it will jump for just a second and then drop out of nowhere. So real quick you're underwater and you got to cut it. And I've done that countless times and lost money on it. I've made money on it several times, but more often than not I've lost money on it because of that. I buy these breakouts or whatever setup it is, and then it immediately drops and it ends up being a fake out. but then it will curl up and do what I originally thought it would do. It just doesn't do it when the setup calls for it. So it's pretty bizarre. And it happens a lot, over and over and over again with GameStop. Breakouts turn into fake outs all the time. Anyway, that's my 2 cents on GameStop. But I do like the fact that it's running and that it's way up. It's exciting. It's fun to get more and more retail traders involved and get more people into the markets is pretty fun and exciting. So I like that. Late, but you made it. That's right, Mr. X. It's okay. Better late than never. When you recommend someone when they're first starting out, I want to get around the PDT, but don't want to go through the foreign off-the-grid brokers. I have about 10K. Doesn't feel like it's enough, though. Blah, blah, blah. Yeah, let's see. Lost money on GameStop. Continue to hold. Okay, so with PDT, the only options are having multiple accounts. If you're trying to trade more than what the PDT allows, your only options are to have multiple accounts or to go to CMEG. That's really the only viable options that I see. So what would I do, now? And I don't know if they had CMEG back when I started trading or not, but I didn't know anything about it. All I knew was that I was under the PDT and I had to be under PDT. I didn't know there was any way around it. Maybe there was, maybe there wasn't. I think SureTrader was a thing back then that could have got me around it, but I didn't know anything about it. All I knew is that, man, this sucks. I'm under PDT. So if I had it to do all over again, I know I would have done CMEG. I would have just opened an account at CMEG. But the downside to that is, like I said, they have a lot of commissions and fees that add up, and that's a real problem when you're first starting out and learning to trade, because you're almost guaranteed to lose money as a trader. 90-some percent of traders lose money. So as a very new trader, you're probably going to lose money. And then when you're trying to learn, you're just paying commissions and fees like crazy. So I don't really know what the best solution is, but it's really the only option is CMEG, or you can do a multiple accounts to get around PDT. So you could open an account at E-Trade and one at TD Ameritrade and all the different brokers that have zero commissions, and then you would just spread your money around. But I get what you're saying as far as it doesn't feel like I have enough to trade, because then if you have a stock that's $10 and you only have couple thousand in that account, you don't feel like you can get big enough positions. I understand all that, but in hindsight, or where I'm at now, my opinion is that, first of all, I probably would have done CMEG because I'm not a patient person, and I wouldn't have the patience to spread my money around to open all these accounts and then try to gradually grow it. I would have just gone for it because that's who I am. I'm more of a gambler. I would have probably gambled on CMEG and gone for it and figured plus I was naive at the time, so I would have thought, oh, I'm going to make tons of money, so this is the only way to go because I'm going to make a bunch of money. I'm not going to lose money. I'm going to make money. So I know that's what I would have done, but I don't know what the right answer would be, because now that I am where I am and I've been doing this for almost 5 years, or maybe even over 5 years, it doesn't seem as what's the word I'm looking for? I don't see trading as like a hasty, make a bunch of money quick thing that I did then. Like for the first year or two, I definitely saw it as, I'm going to make a ton of money right now. Now I look at it a lot differently, because the more you trade and the more experience you have, the more you see stocks for what they are, and you're like, oh, that's not a good setup. That's not a good setup. You find yourself looking for good setups, and they're a lot harder to find, and so it doesn't seem as I don't know why I can't think of the word that I'm trying to think of, but it's you know what I'm saying. I don't have the same feeling that I'm gonna immediately make a bunch of money compared to what I did then. Now I look at it more like it's about gaining the experience, and trading small with zero commissions is probably the best way to go for most people. I understand people not wanting to do that, so if you don't want to do that, I totally understand that. But I'm just saying that as far as the right way to go, it's probably the right way to go for most traders. There's going to be some outliers that could make money with CMEG, but there's a whole lot of people that are going to lose money either way as they learn. So the right way to go would probably be to have a couple of different accounts with no commissions that you can just trade small positions, and like not having a lot of money in those accounts is probably a good thing, because then you can't take big positions. I don't know if you guys, like for instance, my first year trading, I think I lost somewhere around $30,000 or $40,000. It was a lot. It was somewhere, I think it was 30 or 40,000, somewhere in there. But it was a lot. Definitely tens of thousands of dollars. Definitely over $20,000, and I think it was 30 or 40 my first year. I'd have to look. But anyway, so if I had it to do over again, I probably would have gone with CMEG. I probably would have lost even more money or done it a lot faster. So I wish that there was a way to go back in time, and I would tell myself, hey, why don't you not lose $30,000 or $40,000 trying to learn how to trade? You're not going to master this in the first 6 months like you think. So how about trading a lot smaller and being a lot more careful as you learn, and then having that money back? That's one of few things that I would do differently in my trading career. Is that, you know, I threw a ton of money away trying to learn how to trade, trading way too big. So anyway, it's my thoughts on it. But I know that if I had the chance, I would end up doing CMEG if I were you, because it takes the handcuffs off. But you just got to be careful, because you get 6 times leverage, so you can buy 6 times the amount that your account is at. So if you have a $10,000 account, you can buy $60,000 in stock with your $10,000, and then you have commissions on top of that. So it can be a super fast track to losing that $10,000. Let's just put it that way. And I've even blown up an account at CMEG before. So you know, it can happen very, very quickly. I remember I shorted some stock at CMEG, and it was one of the rockets. It was completely stupid to short it, and I'd even been trading for several years at this point. But for whatever reason, I had it in my head that this stock was gonna hit this level and go back down, and it was up like 200 or 300% at that time, and I thought this is gonna be a big winner, so I shorted it. And I held the short through market open, and it took like a split second for that thing to shoot up, really low float, to shoot up, and I was, you know, very leveraged, using my 6 times leverage or whatever to short the stock. So I was very leveraged, and it took like a split second for that stock to shoot up and for CMEG to buy me in because my account was blown up. So it can be extremely dangerous doing that and trading at CMEG and trading with leverage and having the handcuffs taken off and all that stuff as a new trader. So just be very careful. You don't want to be like me and lose $30,000 or $40,000 your first year. That's just not smart. Anyway, I'll move on. So Mr. X. I love the new scanner. So Mr. X, how do I like the new scanner? I love it, bro. I love the new scanner. I've been preaching about it from the mountaintops. Yeah, I made that video about it. I don't know how many views that video has. Let's see how many views that video has. Let's see what we got here. I'm just curious how many views that has, if it will tell me. So we're pushing 1,000, almost 1,000 views on that scanner, and almost 120, actually 121. So almost 1,000 views and 121 likes on that video. I love it because it's free. It's free. I can't say it enough to people. And I've been, telling people on StockTwits about it and telling my friends about it and It's I preach it from the mountaintop because I don't know if people realize that there are not free scanners out there. So it's a legit scanner that has like high of day and near high of day, and you can toggle it, change the alerts. It's a legit scanner. It might not be the prettiest one or have the most artificial intelligence scans available and all that kind of stuff, but it's a legit scanner that works for what I want to do with it, and it's free. People don't realize how valuable that is. Like whenever I lost E-Trade Pro, got rid of their scanner, and I lost that scanner, I was devastated by that. I started using screeners. There's tons of screeners. There's a bunch of screeners like MarketWatch and FinViz and stuff that are screeners where you can click on it and screen the market. But as far as like live updating, constantly updating and alerting you and telling you when there's a stock that gets halted and telling you where there's stock that hits near high of day, an actual live scanner to be free is very rare. It's the only one that I know of. I don't know of any free ones that are any good. So I'm pretty stoked about it. And like Trevor says, stock to trade's expensive. Exactly. And yeah, there's no free scanner. That's why I told you. Exactly, Mr. X. I don't know where you found it at, but it's a great thing. And what's even crazier, even better about it, is that they're going to keep having a free version. The pricing email that they sent me says that they're going to keep having a free version. They're going to have a version where you can upgrade. And I honestly can't tell you what the difference is off the top of my head because I haven't looked that closely into it. But they're going to keep, as of now anyway, keep having a free version. That's awesome. I really can't believe that. I thought for sure whenever the beta testing was over and they actually launched that they would end up charging probably a minimum of half what Trade Ideas and Stocks to Trade and them charge. So I don't know exactly what they charge, but I want to say it's like $1,000 or $2,000 a year. So I thought this one would pretty likely be somewhere in the neighborhood of a minimum of $29 a month and probably more likely $50 a month is what I anticipated. So for them to have a free version that's even, halfway decent, that even has half the features that I need for free is pretty awesome. Because all I really want or need is a live scanner that's looking for near high of days and high of day breaks, halts. I just set my alerts for a few things, and that's all I need. I don't need all the fancy artificial intelligence based scans and things. I can live without all that. So there's a lot of stuff that Stocks to Trade and Trade Ideas have that this probably doesn't have, but I don't need all that. I just don't want to be clicking over to MarketWatch or somewhere and constantly having to refresh it and knowing that it's lagging behind. It's just not good for a day trader. But something, as long as I got something that's immediately alerting me when there's a stock that meets my criteria that's nearing the high of day, like that's all I need. Or that's crossing VWAP if I'm looking for something that's going to cross VWAP and have some strength. There's just all kinds of different plays that you can use with that scanner, and it's free. So crazy. Very stoked about it. Anyway, so yeah, thanks a lot, Mr. X, and thank you to Charts Watcher for that. I'm going to be an affiliate of theirs, and when they start, I don't know, maybe they're live now. I don't know if they are or not. I haven't really paid that close of attention because I've been out of town a lot. But if they're live or when they do become live, I talked to them about becoming an affiliate and actually being able to have an affiliate link and people sign up for it making a little bit of money on it. And that's something that I think is pretty cool, because the only things that I do affiliate links on are stuff that I actually use. So to this point, there's really I've only done Acorns because I believe in Acorns. I really like Acorns. That's why I have their link in some of my videos and I talk about them. It's something I personally use and believe in as a really good company and a really good beneficial thing for most people to use. And then this is another one that I will add to that. I'll start pushing the Charts Watcher because I actually use it and believe in it, and it's super cheap. Even the version that's not free is still cheap compared to Trade Ideas or Stocks to Trade. So I believe in it. So I'm going to try to make a little money, maybe peddling that here and there. Pretty cool. I love whenever I find a new product that actually works that I enjoy and I can share that with other people. So thanks to Mr. X who provided that to me. Now I've been able to share it with almost 1,000 viewers on that video, plus people on StockTwits. So I would say that Mr. X, you have single-handedly probably caused at least a couple hundred people to join that. I mean, I would say that there's a pretty fair likelihood of at least 100 and maybe a couple hundred people having joined through that video, which you inspired by sending that to me. So it's pretty cool. We've helped a lot of people, Mr. X. There's probably a lot of people using that free scanner. I like it. On that note, that's a good positive note to end on. I'm going to get out of here. It's been almost 2 hours, which is crazy because the time has flown by. But thank you guys so much for joining and for commenting and for hanging out. You bet, Trevor. Check out the video that I made. Just go to the video I made on it, and the link is in the description. It's not as fancy as the one you use if you use Stocks to Trade. I like the aesthetics of Stocks to Trade and Trade Ideas better, but it works for what I want to use it for. So check it out. Thank you all. Have a great evening. Happy trading tomorrow. Hopefully tomorrow will not be quite so bloody as today and the last couple of weeks. I'm really getting tired of these big red days in the market. I need to get some momentum back, get some excitement back, get my bigger account to grow back and Tesla to go up and things to go back green. Come on, let's get that up. We need government to pass their little stimulus bill, and yeah, we need some positive stuff. Buy some bonds, government, and pass your stimulus so we can get this market back to rolling, and me and all my subs can start having some more fun trading momentum stocks. Let's get it going again. Hopefully that happens. Thanks for watching. Have a great night. Take care. Peace.